Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 27, 2018. I'm a little late recording, so I'll be moving a little quicker than usual. This video will be more about market recap, but I will also cover a new item. I will look at some cryptocurrencies. There's this, and notice that when I typed them up, it still underlined them. So they don't even know what it is, and this is from PowerPoint. Anyways, let's move on to our S&P 500, Dow Jones, S&P, Nasdaq, IWM, basically are all making fresh highs. Here's an alert that was sent to my subscribers at MasterChartsTrading.com. Excuse me. These indicators, these four colored lines that are located on this chart here, are my proprietary trading indicators. You can get them by signing up at MasterChartsTrading.com, then go to Trade Alert Services, sign up, and once you do that, I will share these indicators with your TradingView.com user ID. So you need several things here. Sign up for TradingView and then sign up for my site. Very easy, but very useful indicators. So I basically pretty much just use that. Let's look at some of the stock funds and also junk bonds. Several interesting developments. Here is IYT transportation average. So notice that last good entry opportunity was on the 3rd of November of last year, or rather, I'm sorry, on the 9th of November of last year, around this area basically, and then we took off to the upside. Again, we're at this green indicator line, so I would expect some sort of a buying and selling of note to occur here. If we don't hold here, then quite often, but not always, we will retest this blue line, which is 188. For S&P 500, for me to become overly worried is if right now the stock market would collapse 18%. So I would need to see a close of below 236 on S&P 500 on SPY. For SPX, that would correspond. Oh, let me just go to futures. It'll be easier. On the futures account, you would have 2365 would be the line in the sand where a true bear market is very likely upon us. Obviously, this is not happening. This is a clearly bullish uptrend. You can see futures, pretty much vast majority of sectors, technology, financials, materials, XRT. By the way, this was a recent trade for XRT for MasterCharts Trading. Pretty nice gain of about over 10%, and this is a pure breakout play. So here I was not looking for any kind of pullbacks, and I simply sent an alert on breakout. We see a breakout above this blue line, and I like to see a close above this blue line. We saw this breakout. I went ahead and sent an alert. We have about 10% gain if you're trailing higher. I have some retailers as well. I have Nike, so let me show you Nike. So here is Nike trade. I opened this Nike trade on November 15, 2018 at 56.77. So I didn't really mess around. So we had a breakout back here on the 25th of October for Nike. And then maybe I wasn't really monitoring this particular stock, but then I saw this breakout and I'm like, this looks really good. This looks very bullish. I went ahead and I entered on the long side. This went in my favor. I sold half here, and I'm still trailing the rest. Another alert, I sent another alert to my subscribers recently. So it's also another about 18% gain. Oh, I'm sorry. That's that thing is it was off. So this is about, I have about 21% open gain currently, and hopefully subscribers open back here in November as well. So retail sector for now is doing quite well. I can't really complain. XLV, also known as healthcare, broke out to fresh highs. Also recently subscribers were notified, and you can sign up at MasterChartsTrading.com. So again, this is a bullish chart. Really can't complain. Okay, let's continue to real estate. So real estate is under pressure. I would avoid, currently I would avoid real estate related funds. So here IYR, you can also look at VNQ, which is Vanguard, REITs ETF, and notice how it's breaking below those yellow lines. There's a break below the yellow line here on the 12th of January. We have a rebound, and now I put this question mark here. I actually published an idea, I do believe. Let me take a look. I think I published an idea, but maybe not. But potentially this could be already shorted. What does that mean in the context of a general stock market is difficult to say. And when we get to bonds, maybe we could see some parallels and interesting developments there. Preferred stocks really got slammed. PGX here is a preferred fund I was monitoring for my subscribers. Here alert was sent to my subscribers, caution, this is a dangerous development on the 19th of January 2018, or rather on the, so around the time the alert was sent, and now we have a fresh break below this yellow line, this indicator line, and in my book this is not a good sign. I mean, we may see again a bounce, but I would personally avoid preferred stock currently. Here's, for example, PFF as well. PFF, another widely traded preferred portfolio fund, and also it's trading below this yellow line. I don't like this action, so I'm basically staying away from it. Okay, so one more trade I wanted to show, and that is my current Twitter trade. Excuse me. So on this chart, what I wanted to show is the way I think, so to speak, and the way I, look for, opportunities and what to avoid. So number one, what I'm looking for is, so let's say a security or an instrument was trading below this red line here, and then all of a sudden we see a breakout above this blue line. So again, these lines can be had at MasterChartsTrading.com, and you can sign up to get those lines on your chart. So at this point, basically, I'm looking at this particular security from a bullish perspective, and I'm avoiding any bearish setups. I'm only looking for bullish setups. So, excuse me. At this point, we can basically buy. And of late, I've been liking this kind of setups. We just simply look for a breakout and buy on breakout. But you can also look for a sort of a pullback play, and this is what I did last time on December 5th, 2017. I went ahead and I entered Twitter at 2062. Also, alert was sent to subscribers at MasterCharts Trading. A few days later, I sold half. Maybe, well, it looks premature in retrospect. Back then, I wasn't so sure about this trade. It looks like a decent trade, but I just wanted to take my money and be done with it. But now it's kind of unfolding into something potentially bigger as we make fresh highs here. And notice how this pullback was basically negated with this enormous surge here on Friday, and this is very bullish sign. I mean, Twitter is up 9.5% on Friday. So generally speaking, this is a bullish sign, and I would be a buyer basically now, and actually there's another alert that was sent to my subscribers. All right, let's look at bonds. Here's TLT on a daily time frame. Still relatively indecisive action. I want to say that this is a bullish security for two reasons. One, it broke out above this blue line back in November of last year, 2017. Then it broke out above this green line on the 6th of December of last year, 2017. We did sell off to below this blue line, and I'm kind of watching this. If we get a close above it, similar to what we had here on the 16th of January, I think it will be in a better position. Maybe we can surge higher. But TLT is sort of a last holdout as far as bond market is concerned. Because, for example, here's IEF. This is a intermediate bonds, and they are in a bear market. So TLT so far is in a mild bull market. We'll see where this goes. Here's junk bonds on the daily time frame. Still sort of an indecisive chart. I looked here on the 3rd, or rather on the 4th of January of this year. We have a close above this blue line, which is in my book a good sign. But so far we kind of sold off below it again, and now we're just trying to get up here, and we're having trouble. So for example, here is a bit of a rejection candle here on the 24th of January. Junk bonds are important to the general stock market because the correlations are high between junk bonds and stocks, so I think junk bonds moving lower may be a bad sign for the stock market. XLU utilities, another bond proxy, still kind of indecisive, and I want to see a close above the blue line, which is currently at 53.84 in January 2018. So in general, overall stocks are bullish. Bonds are still more or less, especially the long bonds. I'm not 100% where this is gonna go. I actually have a position open still from December. My stop is a close below 121.39. All right, let's look at bonds. Here's TLT on a daily time frame. Still relatively indecisive action. I want to say that this is a bullish security for two reasons. One, it broke out above this blue line back in November of last year, 2017. Then it broke out above this green line on the 6th of December of last year, 2017. We did sell off to below this blue line, and I'm kind of watching this. If we get a close above it, similar to what we had here on the 16th of January, I think it will be in a better position. Maybe we can surge higher. But TLT is sort of a last holdout as far as bond market is concerned. Because, for example, here's IEF. This is a intermediate bonds, and they are in a bear market. So TLT so far is in a mild bull market. We'll see where this goes. Here's junk bonds on the daily time frame. Still sort of an indecisive chart. I looked here on the 3rd, or rather on the 4th of January of this year. We have a close above this blue line, which is in my book a good sign. But so far we kind of sold off below it again, and now we're just trying to get up here, and we're having trouble. So for example, here is a bit of a rejection candle here on the 24th of January. Junk bonds are important to the general stock market because the correlations are high between junk bonds and stocks, so I think junk bonds moving lower may be a bad sign for the stock market. XLU utilities, another bond proxy, still kind of indecisive, and I want to see a close above the blue line, which is currently at 53.84 in January 2018. So in general, overall stocks are bullish. Bonds are still more or less, especially the long bonds. I'm not 100% where this is gonna go. I actually have a position open still from December. My stop is a close below 121.39. Okay, here's continuing to our forex coverage, and here is US dollar in a daily time frame. These four lines on this chart are my indicators that you can find at MasterChartsTrading.com. So this chart in general, I would say, is bearish. This is a chart, of a dollar index. So notice that if you watched my previous videos, I put these arrows here and I did not move them. Basically, we should, here's one at resistance should be shorted, and we basically went exactly where I said we're gonna go. Here's euro versus US dollar. Also on a daily time frame, several alerts and ideas were published here for euro. All bullish ideas, and I would be basically buying around this 1.177 area. Latest one was mentioned in December, on the 15th of December, and that resulted in a 750 pip gain. So a pretty nice gain there. British pound versus the US dollar, even stronger gain. So one of the potential entry points was back here, exactly at this blue line. Look how nicely the indicator nailed this support level, exactly at the support level on the 6th of October of last year. So British pound versus US dollar, MasterChartsTrading.com indicators. So notice that you can just simply set a limit there. It was already in our favor and then moved even higher to fresh highs. So a big breakout there for British pound. If we open the hypothetical position back on October 6th of 2017, this particular trade would have resulted in 1300 pip gain. US dollar versus Japanese yen, another nice potential trade here. I obviously didn't alert anybody about this because I'm not trading forex currently, but I know that people use my indicators to trade forex quite successfully. So here US dollar versus Japanese yen. Let me go to the futures chart on the Japanese yen. They tell a better story in my opinion. So again, I showed this chart in the past. Here back in November of 2017, notice that the futures, Japanese yen futures, were trading below this red line, which in my book would be a bearish bias, but then they broke out and we have a trend change to up back on the 22nd of November 2017. The futures retreated some. I maintained my bullish bias, and this was actually alert here, or rather an idea published on the 7th of December 2017. Relatively low risk idea, Japanese yen futures. So this particular trade, if we did it through forex, this is 7th of December. So 7th of December is right there. So we could have shorted Japanese yen on 7th of December. What I meant to say, we could shorted this pair US dollar versus Japanese yen, and that's about 470 pips gain as well, so pretty nice there. US dollar versus Canadian dollar, same thing. We're simply selling. This is a bearish instrument, so in other words, the Canadian dollar is gaining. Same thing. Here is an idea that was published. Canadian dollar to rally versus the dollar back on the 27th of December 2017. So another very nice gain. So about 370 pips gain. And here's finally US dollar versus Mexican peso. Idea was published back here. They're not, I mean, they're pretty successful, but this idea was actually not published on the 1st of, I'm sorry, on 15th of January of this year, 2018, but it resulted in a nice gain nevertheless. So the indicators work quite well for all kinds of instruments, and let me know if you need any help setting them up. Right, today a little bit of a new segment. People are talking about this Bitcoin stuff, and I thought, okay, I'm gonna take a look at it. So I took a look at Bitcoin. It's an instrument. I don't really care how it behaves. So here's a daily chart of Bitcoin, and for now, I would say that I'm keeping a mildly bullish bias on this particular chart. Especially if we close above this blue line, which is at 13,110, that would be quite good for Bitcoin. We could see a surge to fresh highs. I don't see that close yet. I see a break below this blue line on the 16th of January of 2018. I still don't see a close above that 13,110 mark. Alternative scenario is actually quite likely now. We could see a push lower and a close below 8590 currently on January 31st. Maybe I meant to say January 27, 2018. So if I was trading Bitcoin, I don't trade Bitcoin. I was kind of looking to get into it one day maybe, but I would. If we see a close below 8590, I would short it there. Okay, there's some other weird names I had no clue about, but they are there, and it's called Ripple, XRP. And Ripple is outright bearish in my book. So, let me just get rid of this for a second. So this is a Ripple versus US dollar, and by the way, you can get this indicators at MasterChartsTrading.com. There's that bearish break on the 16th of January of 2018. I think here I would short it if I was trading it, like basically at the red line. I would just short it. And then put a stop above this blue line. It's a relatively wide stop, but this is a really volatile security, if I can call it that, instrument, I guess. So we could easily see a drop of 20%, and this is just, you know, one ATR, so one average true range ATR right there, the purple line. It's like 30 cents, I guess. So, yeah, there's Ripple. I think it's outright bearish. I would short it. We got Litecoin. Right, here's Litecoin. This one is getting very close to what I would call bearish levels. So, if we see a close below 169.43 for Litecoin, I would simply short it. And something called Ethereum. Here it is. This one I'm more bullish currently, and Maybe perhaps this is the strongest of the crypto that I just covered, of the 4 cryptos, because notice that we're trading above this blue line. So this one I would still be, if I was hell-bent on trading cryptocurrencies, on the long side I would be buying Ethereum still. But in general, I don't see much difference as far as the behavior of various instruments. Bitcoin is, pretty volatile, but there are some, volatile instruments like natural gas, for example. It's quite volatile. All right, let's continue to gold. This is gold futures on the daily time frame with my indicators applied. You can find these indicators at MasterChartsTrading.com. That's MasterChartsTrading.com. So here we have a couple of alerts that were actually sent to my subscribers to buy at the levels that are shown here. Me personally, I went ahead and I entered GDX. So let me show you GDX. Here's the trade. I have it still open. Actually, I sold half here on the 21st of December. It kind of fell off the chart. But I bought back here on the 13th of December at 21.74. And then I'm basically sitting in my position, but I mean I already sold half here on the 21st, I believe, and I sold another half here on the 16th of January 2018. So that's my position. But then we have 2 additional alerts that were sent to my subscribers, and actually both of them resulted in basically immediate gain to target, depending on how tight your target is, by the way. But this is already a nice jump here. So gold, here's GLD on the daily time frame, looks bullish to me. I don't see too many issues with this chart. On the weekly time frame, let me show you a really cool chart on the weekly. Here's GLD on the weekly chart. Time frame. The price here is not in candlesticks. This is a line chart, so it's a close only chart. You can see that these are fresh 52-week highs above the indicator lines, and so far I have a bullish posture on gold and gold miners. We had a recent trade. First of all, I'm holding Royal Gold myself. So here's Royal Gold. I went ahead and I entered here on 29th of December, and then another alert was recently sent, and that's Yamana Gold, and this one resulted in a very quick gain. And this is a type of trade again I'm looking for as of late. This is a breakout trade. So we have a breakout on 26th of December for Yamana Gold, and then you can see that we kind of found bottom around this blue line and then rallied really hard, 16%, and the alert was sent here on the 1st of January of this year, 2018. So gold looks bullish. Let's look at US oil. Here is CFD for US oil. You can look at the futures. The futures are looking bullish. These are fresh highs. We got several alerts that were sent to my subscribers. Pretty good positions. XLE, this is energy ETF. I have a position open. Straight up breakout play. I didn't really mess around. I bought on breakout on 21st of December and went in my favor immediately. So sometimes that happens. Not always, obviously, but it does happen on occasion. Finally, here's natural gas. Again, very volatile security and not for everybody. But here's a very nice trade, and basically a trend change here on on the 12th of January. You can clearly see it. We have a close above this blue line. For natural gas futures, since then I would be looking to only buy. In fact, I sent an alert to my subscribers. Here's that alert, which was published on TradingView as a private link on January 18, 2018. So I sent an alert at 24:51. So let's look at UNG. Alert was sent at 24:51. That there is your gain, about 10% gain just in a few days. Now, again, do not analyze UNG. Do not use it with my indicators. You will get bad results. You need to use the underlying security. And UNG, there's slippage here. So please use the underlying to analyze natural gas. All right, that's it for this week's recap. Please head over to, first of all, please like this video. Hit the like button is down below. Also hit the subscribe button. I really need your votes and your likes. Then head over to MasterChartsTrading.com. Sign up for 1 month free trial. You get all of the alerts that I was mentioning. Currently, I'm extending my subscription to both basic and elite members, and currently you get the same subscription for, or rather 2 subscriptions for the same price of $24.95 per month. You also get the indicators. Just send me your TradingView ID. So again, thanks for watching and have another great trading week. Bye bye.